Good afternoon, ladies and gentlemen, and welcome to the Longboat Energy PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review questions submitted today and publish responses where it's appropriate to do so. We'll notify you when these are available for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and if you'd be so kind as to give that your attention, we would be most grateful. And I'd now like to hand over to Nick Ingrassia, Jonathan Cooper, and Helga Hammer from Longboat Energy. Good afternoon to you all.
Good afternoon. Thanks a lot for the introduction. We have made big progress with Longboat since we spoke last. Back on 1st of June, we announced 3 transactions in parallel. We had done deals with Equinor, Idemitsu, and Spirit, and we had used an opportunity to build an exploration program, 7 wells, in a market where we could really pick key prospects, and we had built a bespoke program of 7 wells, and we then went ahead and successfully funded that program in an equity issue, and we combined that with an exploration finance facility. So we're fully funded for that program of 7 near field wells, all near also in time, and combining some low risk targets with some very big and very significant upside potentials. And also important observation today, gas weighted portfolio in this market. Since we announced and financed, we have made very good progress, and we have delivered the completion of these deals on the 31st of August. We have all the credentials, all the approvals from the Norwegian authorities, and we have entered the licenses as a fully worthy licensee, and I know an active player. And also, as you will have seen, 2 of the wells have already spud, and a 3rd one is to spud in the next few weeks. So with that, I will hand over to John on a little wrap up on the financial side.
Thanks, Helga. Pretty simple set of results for the half year. We had £38.7 million of cash and no debt. That was following a fundraise where we raised £32.5 million net, and that was pre the receipt of our first negative tax instalment of 5.8 million from the Norwegian government for the year 2021. Operating loss of 1.5 million. We had net income of tax income of 0.6 million, negative tax installments rate related to 2022 that were confirmed in that's rate related to 2020 that were confirmed in 2021. So a loss for the period of 0.9 million. So if we move on to the next slide, there have been some proposed tax changes in Norway, and it's given that these are playing out in the Norwegian press, it's probably better if you run us through those, Helga, and I'll pick up at the end of this slide.
I can provide a bit of background. The tax system in Norway that we have been running with for a long time was introduced in 2005, where the exploration tax refund was introduced, which has been highly successful. You know, it has opened up for independent players. Faroe Petroleum was one of the most successful players in that tax regime, and drilled a whole lot of exploration wells. And for the Norwegian state as well, it has been very successful. A lot of discoveries have been made, and last few years have been fantastic in terms of exploration results. The COVID situation became very dramatic when the oil price also crashed and became a big worry. And Norwegian authorities responded with a temporary tax relief package, which was maybe and has been criticized by politicians as being too favorable for the oil industry. It involved these negative tax installments, which we benefit from now. So we had expected that when the temporary situation was come to an end, that we would revert to that system we had. But unexpectedly, this proposal has been made, and I think the background is that it's this criticism that has been. So what we get is, instead of a 78% tax refund of all exploration funds or exploration spend, we get 71.8% of all costs or all losses we make. So it's a smaller refund on a bigger cost basis. So this is actually favorable. A little bit less favorable for pure exploration spend, but more favorable for a growing business that also will be involved in developments and production. The couple of things that we are keeping a very close eye on is the pledge. Pledge means you can take security in the tax refund, which is important for the bank. The authorities have already indicated that they will allow this pledge to be carried into this new system, which has been already in place for the exploration tax refund. The other key factor for us is that we get some sort of transition period here, and that there's a consultation period ongoing. We are leading a group of companies in that process, and we'll do our best to make sure this becomes a smooth transition. Hand over to John for a couple of examples of what this means for us.
Okay, so thanks, Helge. If we look at the diagram on the left-hand side of the page, if you assumed you had an expenditure of 100 in a given year, and that was, say, split 90 on exploration, 10 on corporate, your rebate would be historically would have been on the exploration spend at 78%. So 78% of 90 is 70. Historically, you can get some of your corporate costs, your Norwegian corporate costs, particularly if you're an explorer, through as exploration, and that can be as much as 50 or 50% or 2/3. In this example, the 5 represents 2/3 of your corporate costs being allowed at 78%, and that gives you a sort of under the existing regime, you get 75 back. Under the new regime, you're going to get 71.8 back, because it's 71.8% of the whole 100 on a broader cost base. So, this is you're marginally worse off when you're in the exploration phase. We were pretty cautious when we ran our working capital models about how much of the corporate rebate we would be allowed. So actually, in our sort of modelling, the result is dampened even further. In terms of a developer, for subsea tieback, you would see on the diagram on the right hand side, you'd see $1 per barrel going from the dark blue at 4.7 up fractionally to sort of 4.8. This regime is allowing you, rather than now than having tax losses carried forward and an uplift that you get back over 6 years, you're now getting 78.1. It's moving to a cash-based system, so you would get relief on the 71.8%. When you spend it. So it's not these changes are not dramatic, and I think it allows to sort of the government to say it's not supporting exploration while actually not kicking it in the teeth either. So I think these will be okay, provided they're brought in a sensible manner, and that the pledge still exists, and we manage the timing, and then therefore we should be able to amend our exploration finance facility in line with the changes. So back over to you, Helge.
Thanks, John. So moving from the tax change, just to remind me, this is a proposal, just so you're aware of that. So it needs to be sanctioned in Parliament. It's likely to happen in the spring. So until that time, we are still in the existing system. Moving on to an update on the actual program. Here we're looking at the map of Norwegian coast and the location of these wells, and I think the key messages here is that these are all kind of independent. You see, they are spread from the Barents Sea in the north to the southern North Sea, Norwegian North Sea. They are all independent, and they are all in areas that we have intimate knowledge of. So we built a portfolio in areas that we know, on well targets that we know, and they are all near field targets, which is really important. They are all opportunities that can be produced into existing infrastructure and existing platforms. It's a very gas-weighted portfolio, which we also think is the right thing to do in this current environment, where both from a market point of view and with increased focus on energy transition. If we look on this slide here, which shows the drilling schedule, just to give you an update on what has happened since the equity raise. The wells are all the same. So having entered the licenses, we look at the data, we look at the prospects, we look at the drilling locations, look at the data acquisition. None of that has kind of generated any surprises. So the wells are the same wells as we presented in the fundraise. So they're all looking very good still. What does change is the schedule, because drilling rigs, they arrive when they arrive. They have to finish what they do on previous well locations. So Egyptian Vulture, we thought would spud in July. That had some delays on the previous well, and therefore was delayed. But that's all history. So that's behind us. The well has arrived and has spud, and it's drilling away. Rødhette, second one, came almost on time, has also started drilling, and both these wells, Egyptian Vulture and Rødhette, are typically 6 to 8 week wells. And by 6 to 8 week, I mean time from the start until we are likely to present conclusive results and hence can make announcements. The next well on the program will be Mugnetind. We thought Mugnetind would be towards end of the year. Mugnetind will spud pretty soon. The rig is a jackup rig. It's on the Ivar Aasen facility, waiting for a weather window. The swell has to come down. Once that has happened, it will move to our location and jack up and then start drilling. So that could be 1 week away or 2 weeks away, something like that. Then we have Ginny Hermine, where there has been a swap of rig slots. So that one is now looking to spud in December. Then we have 2 wells operated by Equinor in the first half of next year, Kveikje and Gambosola. They didn't have rigs when we did the fundraise, but they now have the deep sea Stavanger drilling rig allocated to them. That rig is with Lundin, and Lundin has some options. So depending on how many of these options they exercise, the rig will arrive, currently expected around second quarter of next year. And the final well, the Copernicus, was uncommitted at the time of fundraise. It has now been committed before the deadline, which was 1st September. And Pignig, Polish operator, is currently acquiring a site survey. and will be looking to take a rig on contract to drill that well in the summer of next year. So there's an update on kind of what has happened since last. If we just a little reminder now of these 3 wells that will be drilling very soon. Rødhette, that's a near field target to the Goliath field. Vår Energi is the operator. Vår Energi is what used to be Eni combined with High-Tech Vision, private equity company. They are the operator of Goliath, and they are the operator of Rødhette. And the drilling of Rødhette is timed to fit with being backfill of Goliath production. So hopefully that well, if we make a discovery, will be developed very quickly as a satellite to Goliath. What the target itself is a rotated fault block with a gas cap. Looks like very likely to be a gas cap on seismic, and one of the key objective of the well is to find an oil rim under that gas cap. The next well, Egyptian Vulture, very significant volumes, 100 million. That's net 15 to us if it comes in on expectation. If it comes in on upside, it's even bigger. 25% chance of success is from the competent person report. I mean, we believe it's better than that. When we were in Faroe, we worked intimately in this area, made many of the discoveries around here, and from what the way we evaluate it, this is a good chance of success. It's what we're exploring for is a Cretaceous sands, channel sands sitting in the Grindagraben, where we expect thicker sands than what you have in the wells immediately to the east. This could be blending gas. Key issue for Equinor is that they have too much CO2 in the gas for the marketing, and if this comes in, can be put into the platform quickly to support the blending issue. So again, I think if we make a discovery, commercialization it could be is looking good for a good commercial solution. And then those are the 2 that are drilling, and then this one is the one that is about to spud. It's the Mugnetind. Mugnetind is in a very prolific area in the southern Norwegian North Sea. You have a lot of oil fields there, like Ula and Gyda and Ekofisk. And on the UK side, you have a lot of fields, like J fields and Pierce, and so plenty of tieback opportunities if this is a discovery. I mean, even without seismic, this is a good chance of success because most of the dip closures in this area are oil filled, and this one also has strong seismic anomalies, so makes chance of success even better. So over 50% chance of success, very high. It's very low risk well for being exploration. Plenty of commercialization opportunities. Another one to look forward to. A lot of excitement and interesting times ahead. November will be a key month. I'll hand over to Nick to give us a little update on M&A activity.
Thank you very much, Helge. So why don't I just run through what's gone on the first half of the year, look forward to the second half of the year, and then maybe sort of talk about what that might mean for Longboat. So the first half of the year, we really saw an M&A market that was dominated by private buyers. When I say private buyers, it's primarily private equity. They accounted for a vast majority of the transactions that occurred, and those transactions were primarily in the UK. These are large transactions such as Exxon UK getting sold for $1 billion. And there was very, very few production deals done in Norway. There was the Lime purchase of Repsol stake in a field called Brage. And they were, again, a small private business. What we did see, interestingly, were a number of stalled or failed transactions in the market, and those kind of fell into two different categories. The first category is the ultra-mature assets, so assets that are close to the end of their life, which have significant liabilities ahead of them to decommission and remove infrastructure and to plug wells. And oftentimes you find it's very difficult for buyers and sellers to agree how those liabilities should be divided and where the risk should sit. So I believe that was a big impediment towards a lot of transactions happening. And at the other end of the spectrum, what we saw were, especially in the UK, a number of potential developments that were looking to be sold or partially sold also stalled as the regulator in the UK, the OGA, really slowed down its approval process for new fields as it tries to understand some of the political messages being delivered in the UK at the moment with regards to the development of indigenous resource. So that caused a lot of uncertainty, and that uncertainty usually means deals end up failing. So as we look forward into the second half of this year, we believe we're going to see much the same. The market is really being dominated by auctions for large portfolios, a number of which are in the press, and examples are given there, and that these will be largely pursued and acquired by private equity buyers, oftentimes using reasonable amounts of leverage to make the returns work on these transactions. In terms of sort of mid-market deals in the sort of several $100 million space, I think that could be good news, as we could see a lot less competition, a lot less people looking at those sorts of transactions, and so that could prove an interesting opportunity set, depending on what assets and come up and what they look like. There are several private equity-backed companies. Again, some of them have been in the press recently, coming to maturity. So these are investments that were made in sort of 2015, 16, 17. And as those come to maturity and private equity looks to exit, it could be interesting to see how and where that manifests itself, either through corporate sales or through asset sales in different areas. The other thing is kind of a potential wild card is how the Norwegian tax regime could create opportunities along the value chain, to the extent as John and Helga have described. The tax regime encourages development and makes the financing of developments easier. There could be a real opportunity to pick up some of these assets that are perhaps underappreciated at the moment and look to benefit from the changes to that tax regime. In terms of what does that mean for us? Well, Longboat has been very successful in building up some great momentum during the first half of the year. And we have certainly noticed a major difference in the way that we are approached and addressed in the market, following having done the three transactions, an equity raise, a debt raise, and then completing these acquisitions and becoming a fully qualified company in Norway. And we're already sort of seeing the benefits from that, and how we sort of approach and our approach for different opportunities. And we'll be looking to continue that momentum and build on it as we drive this towards being a full cycle North Sea E&P company. Back to you, Helga.
Thanks, Nick. So to summarize, so Longboat was created to replicate what Faroe did. Faroe Petroleum was sold back in early 2019 for $900 million. It was built very much with exploration and M&A. The way we started Longboat is kind of a big step to what Faroe did. So it took Faroe many years to be in a position to drill 7 wells within a short time frame. We are there already. So this is a bespoke program. We pick these wells, and the wells are all going to be drilling in the next 18 months. This is all in Norway. It's all near field. It's all, say, in a good setting from an ESG point of view. So with that, I will finish off this presentation and open up for bit of Q&A.
That's great. Helge, Jonathan, Nick, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company takes a few moments to submit to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be accessible via your Investor Meet Company dashboard, and we'll send you an email when it's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately when this presentation is ended, we'll redirect you in order that you can provide the company with your views and expectations. Helge, Jonathan, Nick, obviously investors had the ability to pre-submit questions, and we received a number ahead of today's event. A couple of the same nature and a couple of unique in their own right. So perhaps if I could start off with the first one, which really talks about acquisitions. It references the fact that the company intends to capitalize on momentum to continue to pursue the value accretive acquisitions. You mentioned this in the RNS dated the 26th of July. Has any progress been made on any other opportunities? Are Longboat currently involved in any other processes to acquire more assets?
One for you, Nick.
Thank you, Helge. Look, we cannot comment on current processes. What I can say is that we are active in the market. We know, we all have been involved in the market for a very long time in various guises, and so we keep a very close eye on everything that's going on. If you look at Faro, it was grown both through a combination of organic and inorganic growth, so kind of discoveries and exploration, as well as through transactions, and indeed sometimes those two things merged using discoveries as a currency for growing the business. So look, we remain actively pursuing and looking at all sorts of different opportunities across the value chain. Transactions invariably take longer than people assume they take, and so but we will continue to do that. We are very value-driven people. Collectively, the management team is our big shareholders in the business, and we would only do things that we think are really value accretive to the business. And so we often take sort of some time to find the right things, and we feel that we managed to do that the first half of the year, finding some assets that were underappreciated, and we're continuing to seek stuff like that now.
That's great.
Yeah, I think underappreciated as people were not focusing on this part of the life cycle, for sure.
Thank you. Just turning on to the next question. Longboat seems to have recruited a large number of additional employees in recent months. How much technical input have the Longboat team had in the location of the wells for the 7-well exploration program? And were the well locations selected by the operators prior to Longboat's involvement?
In terms of the first question, I mean, we have a team of 12 staff in Stavanger and 4 staff in London from 1st October. That completes the recruitment for at least with the current portfolio and the current kind of size of the business. That's a lean setup. It's a highly competent team. Extremely pleased to have recruited some really good people, which is absolutely essential to deliver success with Longboat. In terms of impact, I mean, these 3 wells that we're drilling at the moment, they were planned before we entered the license. So we haven't had much impact on location or the plans for those wells. But that said, we also don't have any disagreement with those wells. Those wells are drilled in good spots and have good justification, also good plans for data acquisition and follow-up contingencies. So they're all, we're all in agreement with those. On the next wells, we do actually have already a very active role in those. It's not so much about the size of the company and the size of your equity position. It's a lot more to do with having done your homework, having a competent view on issues, and we do. So we do have a some geologists and geophysicists that are extremely experienced. So we are already kind of very actively in dialogue with the operators and the partners about optimizing well locations and follow-up plans and what have you.
And I think the only thing to add is we didn't just suddenly, it wasn't the finance director choosing where to put these wells. It was, we were using technical staff that we'd worked with previously who were working as consultants for us prior to, securing people into permanent positions.
That's right. And just so that's understood, I mean, the need to have permanent positions and a permanent tag is our choice because it's a good way to be organized, but it's also a requirement in a Norwegian petroleum legislation to have certain technical competence in-house.
Thank you very much indeed, guys. Coming to the kind of final pre-submitted question is actually more of a statement for your comment, really, and it really relates to the promotion of the company to the market. It says Longboat is a highly underpromoted stock. It goes on to really reference the fact that if you're not promoting, what impact does that have on, I guess, liquidity and overall confidence? The submitter of the question goes on to say that I've stayed on the sidelines and I'm not actually a shareholder as a result. However, and others I know would love to invest if we knew that concerns over lack of promotion are going to be addressed. So I think it's really about engagement, how you see that moving forward, particularly with the market at this particular end.
Yeah, I hear what is said, but I mean we announce when we have announcements to make. We are a publicly listed company. We can't kind of over promote anything. We have to when we drill these wells and the drilling results will come. We will announce them and value will come through. So whether we could,
I think a bit
on social.
Yeah,
I don't know if you guys have any comments.
I think a bit of it is, with MiFID II, it's the lack of access for, to the extent there are any analysts still covering the oil and gas sector, and that the number has dwindled a lot. But I think one of the real downsides that the government didn't think about with MiFID II was access to research. And I think, one of the things that we could do is, potentially get some paid for research that then we can circulate. But, the problem with doing that is we have paid for the research. So, everyone's going to go, well, that's not independent, you paid for it. But, it's something we could do to get some more information out there on a way to value it and to look at it. But, there's plenty of upside here. But, we're a public company, we have to be responsible, and we have to, as the Hope says, when we have news, we announce it.
I think just to say that we share the frustration. We share the frustration of not having a higher share price, obviously. But it is what it is. I mean, all we can do is continue to build a good business and do the right things and tell the world every time we do. But people say hydrogen or windmills and they get all excited about it. The thing is, it will a real value always come through in the end. So I think all we can say is I think what we're doing is extremely value accretive activities that will play out. So hold your breath and things will happen.
And to pick up on what Helge says, we are supportive. We're not worried about the energy transition. After all these resources decline every year once they're on production, they are finite. We support the energy transition, but we are targeting, with this portfolio that we've built, we're predominantly targeting gas. It's going to drive and support the transition. It's cleaner than many of the hydrocarbons. And while we work out how to deal with the intermittency of wind turbines and how to store it and the feasibilities of hydrogen, hydrogen will play a role in things going forward, but it won't play as many roles as some of our ministers think it will. We need some gas for 20 or 30 years to help us fuel the transitions. The reality is we need a lot of energy from a lot of different places, and this maybe part of the drag is that, being a traditional energy supplier isn't that popular. But, we've seen some movements in gas price recently, which have got people's attention. I think we'll see some developments on the grid this winter that will get people's attention, and they won't be for good reasons. So, most of the UK's imported gas comes from Norway. It's very, very important for the next 20 years, 30 years, and that's what we're aiming to help with that and play our role in the transition, albeit from a traditional perspective.
Thanks very much, guys. Okay, so that deals with really the pre-submitted questions, and I did take the liberty of merging a couple just given the length of them. So thank you to those investors that took the time to submit those questions ahead of today's event. We've had a couple of questions submitted during the live event, one of which Nick kindly answered, which was how much of the company did management own, which was 4%, around 4%. And I think there's just one further question in there. I don't know if you guys can access that on the Q&A tab, and if indeed it's appropriate to answer, I'll hand back to you. Before obviously we look to wrap up and then direct investors to provide you some feedback.
Yeah, there's a question here. Do you foresee the need for further funding in the short term? I think, John, you're best placed to answer that one.
I think it depends on how Nick's working hard on digging. If the wells come in if the wells are drilled on budget with success, we are funded. We believe for that. Now, look, if every well comes in and every well suddenly decides it needs an appraisal well, then we will need additional funding. We need to also deal with these tax changes and secure our working capital facility and amend our working capital facility. But I think the big question is, the big question we're all asking is, are you coming back with a production acquisition anytime soon? Well, I think that we've seen very little really this year in terms of things our size print that we would want to be involved with. We're working very hard. We're trying not to participate or win auctions because that's a bit of a curse. So we're looking at those. Nick's working very hard. If he comes up with something, then of course we will take it to our shareholders to see what they think of it, as well as if it's got the capacity to be debt financed, put debt finance in it. So I think it's very much depends on our M&A success.
Jonathan, thank you so much indeed, and to both Helge and to Nick. It looks like you've taken you have taken every single question that's been thrown at us this afternoon. So there aren't any further questions at this point. So it might be an opportune time, perhaps for me, Helge, to hand back to you for a few closing comments. I'll then redirect investors to provide you with their feedback.
Thank you. Yes, no, I think just to close off, I mean, we are very much on track with our plans and our strategy here, and looking very much forward to the next few months and these wells, and hope to come back to you with some really positive results, and then next step would be from a better position and a higher price. We just keep our fingers crossed and see what happens.
That's great. Helge, Jonathan, Nick, thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Longboat Energy PLC, I would like to thank you very much for attending today's presentation. That now concludes today's session. Good afternoon to you all. Thank you once again.
Thank you.